Alright, and this is the second episode of 3, when I would like to broach a very important topic, whether we are in a recession or trying to avoiding with a vengeance. So, today I would like to zoom in Chinese economy and also United Kingdom's one. So, these are the economies that have a quite large percentage of a global GDP and have its importance to where the global economy is heading. So let's begin. Alright, so from China we have such a spectrum of different economic data been raised during recent month. So I had taken this period of 23rd of April by this day of today. So these were the most important gauges that we were about to take in consideration in terms of regarding where this economy is heading. And on Friday, 29th of April, we've seen that NBS manufacturing PMI has really let down the economists. We have dropped below 50 significantly, and we can find that this is one of the cases that has really got into troublesome aspect when we've seen the widespread of COVID-19 lockdowns that curbed production and disrupted supply chains. So PMI is really getting worse right now. I'm pretty sure that we won't hit those levels seen during 2020, but those 45 levels might be still intact. So that's one of the things. Another spectrum looking at the issue is analyzing K-chain manufacturing PMI, and this one exactly showing us also that we have going downturn at a very rapid pace. So it's not very optimistic, and showing us that we may be very anxious about the state of Chinese economy. Right of next, the balance of trade is showing us that we are in a quite of a average range of 50 points. However, after this balance of nearly 100 points, we can find that right now the situation is stabilizing, and in terms of 1 year area, we are rebounding after this February's period of such of a real slump. So right now we can find that this COVID-19 problems are curbing in some key cities, and this one is also paralyzing some of the aspects regarding supply chains and other things that also add up to this balance of trade gauge. As of next, we have China inflation rate, and this one exactly has risen to 2.1% in April 2022 from 1.5 in March, and this is the highest reading since last November. So right now we can find that inflation rate is speeding up, but is not getting as bad as the majority of the rest of the world. Right now the cost of non-food products increased 2.2%, and one of the reason why this gauge is not so lifted is that the economy is still closed due to different cases of COVID-19, and right now, as long as lockdowns are staying in the economy, we could find out that those the pace of retail sales and also this gauge of inflation rate may stay on those levels. So it may really get worse when those COVID-19 cases will drop down again. And the last one for now, there is industrial production year-over-year gauge, and this one has also not very optimistic for now. China industrial production has dropped. Right now we are in a lowering tendency and getting below zero level. So this one gauge is getting worse as those COVID-19 lockdown measures are getting also quite tough. And right now the paralyzed distribution and also snarled supply chains are something that add up to the very worse ratings in terms of industrial production. So this one really is something that economists should ponder about, and right now there is not much optimism in the air. And right now let's have a look at how the US dollar to Chinese yuan ratio looks like. When analyzing the chart, we can find that US dollar has started to weaken against yuan on May of 2020, and this tendency has lasted throughout nearly 2 years. So right after this pandemic broke out, we could find the expansion of the economy, and those stimulus checks been given out that also has prompted a Chinese economy forward. Right now we are right at the level been recently seen on November of 2020, so we can find that this tendency reverted, but we can find that also rebounds from 680 is quite strong. So US CNY right now is showing us that there might be a quite of a drawdown ahead. Maybe USD may get even back to 6.50-ish levels, but from there I would rather observe US dollar to strengthen rather than Chinese yuan to have its power. So right now Chinese economy is appointing some weaknesses connected especially to the cases of COVID-19, that the zero COVID policy has brought its economy back to the ground, or is really going to. So I would rather observe definitely to Chinese yuan had its more problematic times ahead. Right now let's have a look at United Kingdom's interest rate, as we are smoothly jumping into those countries' data. So right here we have seen that those interest rates been risen by 1 point, and that was the fourth highest consecutive rate hike, pushing borrowing costs to the highest since early 2009. So right now we can find that also United Kingdom is following the path of United States, and it shouldn't be changed anytime soon. Right now the only one lagging is European Union that I've recently mentioned, but it also is going to change probably in coming months. So up next we have United Kingdom's GDP annual growth rate, and this one expanded year on year to 8.7%. So this one showing us, however, the slowdown that may come up in next quarter as rising inflation hurts in consumers' purchasing power. So this one showing us the expansion, but the next quarters may be bit more problematic for economists and also central bank. Right off next we have GDP growth rate quarter over quarter, and this one is going downturn, but as I have mentioned, we are waiting for the next gauge that may tell us a bit more. GDP, however, month over month has contracted in March of 2022, and right now we are awaiting the next rating that will be published in May for April. So that's very important to look at. As of next, unemployment rate right now is going downturn, and it's very optimistic. So the similar case as in the United States. Right now we are heading back off this COVID-19 problems. So that's something that is one of the bull case for this economy. Claimant count change. This one, however, we can find that the number of people claiming unemployment benefits in the UK fell, and this also is optimistic as more and more people are getting back to their job. And right of next we have inflation rate for the UK, and this one is really problematic. This is even a higher gauge that have been seen in 90s crisis, and we can find that biggest upward pressure came from cost of housing and utilities, and following the increase in the office of gas and electricity markets cap on energy prices. So this one showing us that such problems with electricity and also liquid fuels are really overwhelming lots of consumers, and right now is showing that this inflation might get even worse in the future. And over next we have GfK consumer confidence, and this one is also getting downturns as right now those gauges are even getting worse than during this pandemic breakout. So right now we are in the quite of a tough time regarding inflation, and that's slowing and also worsening consumer confidence to that extent. And as of last we have our retail sales month over month gauge. Right now we can find that the outlook for consumer spending remains subdued as high inflation is hurting the purchasing power. So we can find that this gauge got better, but still is lagging behind what been seen back before the pandemic broke out. So right now we have much to be done regarding fixing this one. So retail sales may get finally improved after this inflation will get past. Right now let's have a look what British pound futures chart is telling us, and we can find that this lowering tendency started on June of 2021 and has probably stopped at on May 9th of May 2022 with this quite of a firm rebound. Right now we are heading slowly but surely back to those resistance that has of next has become a support at 1.26 level. So this is next resistance that may be respected by the market. Right now we can find on a quite of a longer horizon that British pound futures couldn't really keep up with this breakout, and eventually has broke down back below this line on about April of 2022. So right now we are getting back to this lowering tendency that been started on December of 2007, and right now we are not very far from the all-time lows on Great Britain pound. So what could we say for future is that this rebound may appoint a possibility of heading back towards those upper band of a trend line, and we may see a possible reversal of a trend like this. And that's it in today's episode. Hopefully you found it informative. If you have any questions, just put it in the comment section below the video, and see you tomorrow for Japanese, Australian, and also Swiss and also New Zealand's data that will also be hopefully very, very knowledgeable.